Kimcho, and welcome to the Wendell Effect for the Indian markets. This is the 5th of February 2023 edition. My name is Brandon Wendell, and I'll be with you for my view on the financial markets of India. Just a quick reminder, the Trading Market Mindset organization is not a broker-dealer or investment advisor, so we're taking a look at this information from an educational standpoint only, not telling you to buy or hold any particular securities or give any personalized recommendations. This is done, again, just for educational purposes. Past performance is no indication of future result. There's always risk of loss in the markets. No matter what we do, we can never eliminate risk. And we're not subject to trading restrictions, so we got a position of security initiate one at a time. Make sure you stay in touch with me. You can hit me up, brandonwendell.cmt@gmail.com, to put in suggestions and things you'd like to see in the videos. Maybe if there's any guests you'd like to see, I can try to contact them and get them on as well. And don't forget to hit subscribe and like, and also alerts for the videos. That way you get notified when they come out every week. I want to thank you for watching. So looking at last month, you can see that we still had strength in technology. A little bit of finance, was mostly mixed though. And we had a little bit of consumer non-durables going to the green side here. Last week, we had pretty much across the board a lot of green except for Reliance, ONGC, and Coal India. So, diving into the Nifty, looking at the Nifty for the next couple, well, I guess about 10 days here, next couple of weeks, 68% of the time the Nifty actually rallies over the last 25 years during this week. Recently hasn't been performing as well, though. So, looking at the weekly chart of the Nifty, you can see we are pulling back off the highs and retraced almost over 3/4 of the rally we recently had. So we'll have to see. We got some bullish pressure last week, and we'll see if that's the end of the move down. We did hold well above 40, so the bullish pressure looks like it might continue this week. Looking at the daily chart, we had a positive divergence, which signaled that we were going to rally towards the end of the week. You can see lower lows on price, but higher lows on the indicator led to that comeback. Looking at the 4-hour chart, we're moving towards the demand zone of 17,129, but didn't quite get there. Again, the bullish divergence where prices are making lows, but the indicator shows less bearish momentum, led to that buying pressure at the end of the week. So it looks like that may end up continuing and snapping that trend from down back to up. Anyway, you can always take a look at this, some of the individual securities. This is the link if you're interested in joining me and using SeasonAx, which is the software I use to find some of the seasonal moves here. You can use that link. Looking at Reliance for the last, was it 25 years again? Yeah, last 25 years from now until February 19th, there's usually a little bit of a rally. 68% of the time, we've had about 1.5% rally going on. So looking at the daily chart, though, it shows a different picture. On the daily chart of Reliance, we've impulsed, corrected, impulsed, and duplicated the preceding impulse. We're getting some indecision now, but still lots of bearish pressure. Small divergence where you can see slightly higher low on the indicator with lower lows on price could mean that we're bottoming out and possibly getting ready to push back up rather than testing that demand below. So Reliance may try to move up, but it is going to run into some natural resistance or supply right here at about 24.50. TCS was another big player on the market. 61% of the time for the last 25 years, we had a small rally. It's mostly flat, but just a little bit of bullishness coming in. And you can see that we are coming up to our first target of the previous impulse, 61.8%, and stalling out a little. So we may see some sideways movement, but underlying bullishness might push us a little bit higher. Infosys also suggesting a little bit of a bullish bias over the last 25 years. It's rallied 60% of the time with an average return of almost 2%. So looking at the chart of Infosys, we can see that we are moving up just fine. We had a little bit of indecision on this candle with the small body, but a large bottom tail indicates buying pressure. So this looks like Infosys should continue to push up. Our next overhead target where there might be a stalling point is 1629, and then ultimately 1705 will be the next target. So I expect this to continue to go higher and take some of the Nifty with it as well. HDFC Bank also 60% winning trades over the last 25 years. It's kind of a common number there. Average return 1.2%. Looking at the chart, we are stuck in this sideways range still. We had that false breakout, came right back and slammed down to the bottom of the range. Again, if we try to go higher, we do have plenty of bullish pressure, but we need to be more than we had before. If there's less bullish pressure than we had on the previous rally, expect a pullback to the bottom of the range yet again, maybe even all the way down to 1560, depending on how much that bearish pressure picks up. So if it does come out where we break above and retest the prior high and we have more momentum, then we're likely to keep going to our upside targets of about 1725 or more. ICICI Bank is giving us a little bit of a bounce here. I don't have the percentages on this one, I believe. Let me just make sure. No, I don't. So on ICICI Bank, oh, actually, wait a minute. Yes, I do. Let me see why I saw it sliding over here. I have to make sure my animations are there. And they are. Okay, so going for the historical chart, there we are. 68% of the time, it's actually rising this time of year. So going back, you can see that we have had a big downtrend or trying to retrace. We're right back to the origin of the selling pressure or supply. It doesn't look like we have enough momentum to actually turn this around. So surprisingly, it did push back up, but it looks like we may stall out here. If not here, then definitely at this 900 level where there's a lot more selling pressure. This candle that we had on Friday is indecision, so that we may be at this little peak before we start turning down or a bit sideways. But I wouldn't look at ICICI Bank to actually be long this week. Looking at the Bank Nifty futures, overall not so bullish. From the 5th of February to the 19th of February, 41% of the time it's gone up. The rest of the time, and even when it has gone up, it hasn't gone up much. And we're getting ready to get to a very bearish time of year, apparently. If you see back for the historical 25-year pattern, it drops in late February into March. So, looking at the weekly chart of the Bank Nifty, we had a little bit of a bounce after a retracement of our previous impulse, 38%. And it doesn't look like that's ready to continue. We might just go a bit sideways and get choppy here. We lost a lot of our momentum. We didn't get bearish momentum per se, but we also don't have a lot of bullish momentum left. I'd expect a small candle to form for this week. On the daily chart, we turned just shy of the origin of buying pressure at 39,100. So again, we may get stuck this week between about 43,000 and 39,000. So it's a pretty big range, but we might get stuck within that range. Try and narrow it down a little more on the 4-hour time frame. You actually have still 43,000 down to about 39.4. It looks like we may just get some chop in this area. So for some other trade ideas we were looking at, we had ABC Capital. Looking at a daily chart, we are consolidating in kind of a parallel, no, I guess it's more of a triangle form. And after a big rally like that, you'd expect continuation to the upside. Now we do have demand down below at 130.05 to 128.35 and also 127.50 to 125, but we may end up bouncing before that. As you can see, we are getting consolidation, and usually it leads to a breakout. So if we do break out of this formation, you could possibly go long with your stop below the formation and target some of those Fibonacci extensions. On PNB, Punjab National Bank, I forgot to put the data there. Looking at a short opportunity here, you can see it's a double top formation. So it looks as though we might try to rally back up. The best entry would be at supply 56.70 to 58.10 with a stop above, but that may not happen. We may end up breaking down from this area, and if you want to trade the double top as such, keep an eye out for a close below. I usually don't trade the breakout. I wait for closes below this neckline and a retest of it. Anyway, we got some demand right away. If it does break down, 46.50 is my first target, and then target 2 is 38.95, the measured move, and also getting out before the origin of that buying pressure below. UCO Bank also looks a little bit bullish, even though I said the banks in general, the Nifty Bank looks a little bit weak overall. It could be met with a little bit of buying pressure on some of the individual securities here. So we have this pullback that's happening right now, very quietly drifting downwards towards 22.25 to 24.50, looking for a bounce at that point. Target 36.20 and then target 2, 43.40. IOC, Indian Oil Corp, on a daily chart here, we got a pullback that's occurring. Looks like we should bounce right near this origin of buying pressure at demand, 74.10 to 75.15. My first target, 80.30, with the second target, 87.35. And on fact, we have actually hit the demand zone, so hopefully we're able to get in still. Don't chase it too much if it starts moving up. But you want to enter right around 267.30 to 240.90 with the stop below. There are earnings coming out, so you might want to wait for those earnings so you get a little more certainty after the earnings on what's going to happen. Target 1, 348.70. Target 2, 415.35. So that's what I got for this week in India. If you got any questions, please email me, brandonwendell.cmt@gmail.com. You can also find me on Twitter and send messages to me there if you'd like. Please make sure you hit subscribe and like, and also get the alerts for this video, so that way you'll be notified when we have more videos being put out every week. So until next time, everyone, trade safe, trade well, take care, and thank you for watching and being here.